Next is also a very important current affair, very important current affair. It's regarding Financial Resolution and Deposit Insurance Bill 2017. Okay, so before discussing this question, it's a 3-statement question, you need to have an idea why the government have brought this Financial Resolution and Deposit Insurance Bill. This bill the government have brought mainly to consolidate all the regulatory laws covering India's financial institutions. So the purpose of this bill is to consolidate all the regulatory laws associated with India's financial institution. So as part of this bill, the bill says that the bill seeks to set up a corporation, what is called as Resolution Corporation. So under this bill, a new body will be created called by the name Resolution Corporation, and this Resolution Corporation will decide regarding winding down or reviving or resolving. So if a financial company have become weak, so a weak financial company, whether to shut down or wind down, whether to revive or whether to resolve any problem associated with the ailing or a weak financial company will be decided by this Resolution Corporation. So Resolution Corporation play a very important role in reviving or winding up on a ailing financial company. Now, so if you note down, you can compare this bill with Insolvency and Bankruptcy Code. So Insolvency and Bankruptcy Code is mainly trying to address companies other than financial companies. So if a company become weak, Bankruptcy Code helps them to revive or liquidate. But for a financial company becomes weak, they can't use Bankruptcy Code, they have to approach the Resolution Corporation, and for them it will be the Financial Resolution and Deposit Insurance Act will decide. Now it's still a bill, it will take time to become an act. So after the act only this corporation can be set up, but try to have an idea. This is dealing with only with financial company. Regarding non-financial company, we have a Bankruptcy Code. Now under this, so one of the controversial provision of this bill was that there was a provision what is called as bail-in provision, a provision called as bail-in provision. Bail-in provision, so if a financial company becomes weak, in order to revive the company, the Resolution Corporation have been given the power to cancel or to come with, to go for a bail-in. So the Resolution Corporation have been given the power to use a bail-in provision in order to reduce the bank's liability. It means that bail-in is mainly means that the depositors' money, so depositors who have invested in a financial company or in a bank is a financial company. So the depositors' money will be used for reviving the financial company. So that provision is what is called as bail-in. So this bail-in provision have created lot of controversies. That's why this bill is still pending. So even though many changes have been, government have announced many changes to this bail-in provision. Just have an idea what you mean by bail-in means. The depositors' money will be used for the reviving a weak financial company. If the taxpayers' money is being used to revive a financial company, then that is what is called as bailout. So be very clear with bail-in and bailout. Taxpayers' money is being used to revive a weak financial company or a bank, that is called as bailout. If the depositors' money is being used, that is called as bail-in. Now the government, so what is the government stand is, government says that presently we have an act called as Deposit Insurance and Credit Guarantee Act. So under the Deposit Insurance and Credit Guarantee Act, a depositor who have invested in the bank up to 1 lakh. So a deposit of up to 1 lakh is being guaranteed by this Deposit Insurance and Credit Guarantee Corporation. So above 1 lakh there is no guarantee. So what the government says that, okay, under this bill, the Resolution Corporation will be empowered to increase the limit. So government is not ready to amend the Deposit Insurance and Credit Guarantee Corporation. What it said that it will empower the Resolution Corporation to increase this limit of 1 lakh. So in that way, and another thing what it said is that if the uninsured, if a financial company is going for liquidation, in that case, this depositors, uninsured depositors are depositors money with above 1 lakh, will be getting precedence over unsecured lenders as well as government dues. So before government dues as well as unsecured lenders money will be given, this uninsured depositors money will be given. This was what government have guaranteed in order to calm down this controversy regarding bail-in clause. Another offer what the government have said is that it said that this bail-in clause will not be applicable to public sector bank. So there is nothing to worry. So what it is trying to say that a depositor's money in the public sector bank will not be affected because bail-in clause of this financial resolution and deposit insurance, financial resolution and deposit, this bill provision. This financial resolution and deposit insurance bill will not be affected, this bail-in provision of this bill will not be implemented in a public sector bank. So it means that if you have invested in a public sector bank, bail-in provision will not be used. So it means that your money will be saved. So it is, the government is giving an implicit guarantee for public sector bank because government is the owner of public sector bank. And another thing what it said is that, okay, before cancelling the liability of a depositor, the insured amount cannot take place without disallowance. So even in a private sector bank, the depositor's consent is required before cancelling his deposit liability. Okay, so only this bail-in provision also can be used only in private bank, that too with the consent of depositors. So many changes have been suggested by the government, especially in relation to bail-in clause. So if you are aware of these points, you can answer any question related with financial resolution and deposit insurance bill. Now we will try to solve this question. With reference to financial resolution and deposit insurance bill 2017, consider the following statement. The bill seeks to create a resolution corporation that will be in charge of winding down, reviving or resolving in any other way an ailing financial company. So statement 1 is correct. The proposed bail-in clause in the bill will not be used for public sector bank. That is also correct. The bail-in clause can be initiated only with the consent of the customer. That is also correct. These were the recent changes made by the government after the bail-in clause controversy. So answer here will be 1, 2 and 3.